Is there any trend or anything new that you think any real estate player watching us shouldn't be ignoring at the moment?
I started my career in Silicon Valley, so disruption is not a bad thing. And usually when there's technological innovation, be it e-commerce, be it things like AI, it usually leads to net job growth, not reduction.
Justin, thank you very much for being here today. We just finished a full day of events with 150 participants here in Abu Dhabi. But before we go there, can you explain us a little bit more about Affinius Capital?
Sure. Affinius Capital is over a 40-year-old company, headquartered in North America in San Antonio, Texas. Clearly, obviously just focused on real estate. As it relates to Europe, the office has been open for 11 years now. Originally just focused on building out a European logistics platform driven by our development company that we own, Mount Park. Over about the last 4 years, we've also focused on build-to-rent in the UK, data centers, and just this year, we're establishing our credit platform based in London.
Very interesting. Now, why are you here in Abu Dhabi and how often do you come here? How is this market related with what you do back in Europe?
Well, to start, we have a lot of deep relationships in the region. We've worked with a lot of the bigger sovereign wealth funds here, really over the last few decades. And so it's a good opportunity to strengthen some of those relationships, both today and some of the meetings we'll have tomorrow, and create some new relationships with some of the groups that we've had some initial meetings with before and wanted to expand those in the future. And also to understand the sentiment in the region and share with them, given all the geopolitical changes, what we're seeing in the market and how we might work together in the future.
Now, let's talk about Europe. You are active in different asset classes. Where do you see the best opportunities right now? Is there a favorite asset class or you guys trying to find the best opportunities to deploy capital?
Yeah, I can't say there's a favorite one right now. I mean, we're in the property types that we want to be in. We continue to see a lot of the good tailwinds for in logistics. We think it's really undersupplied as compared to the growth of e-commerce that's coming, and really some of the supply chain reconfiguration stories that are happening. So we'll continue to develop the business in Europe over time. We're proud to have full ownership of Mount Park, which allows us to further build out that land bank and develop what we do. As it relates to residential, we think it's incredibly undersupplied and maturing, albeit quickly, with a greater service level and an acceptance of renting as a choice by a lot of consumers in Europe. Data centers really a global strategy for us. So we've originally just focused on called the FLAP-D markets: Frankfurt, London, Amsterdam, Paris, Dublin. Although we're seeing demand even come to some of the secondary markets, and so we have one land site with 100 and almost 140 megawatts in London that we're looking to take and develop this year. And lastly, we think the credit strategy is one that really has legs now, something that we have grown incredibly in the US, and we see debt funds coming in, really creating an alternative for borrowers in Europe, and really being embraced by the senior lenders that, due to regulatory reasons, see a lot of synergy with us as debt funds. So all those things, those are all strategies where we really see the next decade room for growth and the underlying fundamentals driving them. And really in all those strategies, we are able to really grow an expertise in North America, come to Europe, tailor it to the local market, and then with really local teams, build those businesses.
Now, institutional investors, investors in general, they like previsibility. They like to know what's going on.
Mhm.
And if anything, for the last 5 years after COVID, the war in Ukraine and Russia, and then the Middle East issue with Israel and Hamas, and now with Donald Trump, there's so much going on in the world. Is there anything specifically that has been anything that is important in your investment strategy right now? How are you coping with so much uncertainty at the moment?
I think it all starts with our customers. That starts with our logistics occupiers, the need for housing, the need for data centers and digital economies. So we look there first. Where is there demand for new space and changing space? Obviously, all of those events you talked about create instability in the market, which is difficult when when you develop, it takes years to produce that product. We tend to take a long-term view, which you have to. So we make sure that we are appropriately leveraged in what we do, that we manage our risks, and that we have the right basis around what we have. Uh, so all those things considered, but we take calculated risk in how we manage that. We like development because fundamentally, you are developing to a higher yield than prime yields. So it creates a built-in cushion to that. So as yields might push out or in, we know it at a minimum, we are likely to be at the development yield we're targeting. We also get to pick our specifications. We know the building we're going to build, and we de-risk a lot of the construction aspects through guaranteed maximum price contracts and manage all that risk to make sure that our potential return is protected in what we do. But, I think the last point you mentioned as far as tariffs and the renewed instability in the market, we're a week out. It's really hard to say how this will impact um, globally. I think it's it's interesting right now, some of the changes going on in Europe with Germany committing to $1 trillion of new expenditure to drive growth. There seems to be a renewed sense in the EU of a willingness to work together. So there are reasons that feel like there are green shoots in the market, that this collaboration will drive business further. But I think we're in a period where a lot of investors will wait and see, and we'll certainly do that. Make sure we lease up vacancy. Make sure we do the right thing. But at the same time, always keep an eye out for opportunity, and fundamental opportunity in the good locations. And you know, as one of the panelists said this morning, stay positive.
That's true. That's true. Final question here, Justin. Let's talk about trends or about different things that are happening now in real estate that might be a good opportunity for an investor or a developer or property company. There's a lot of things going on with artificial intelligence, machine learning, prop tech. Um, Maybe you are a more traditional investor and you see an opportunity maybe in data center.
Mhm.
Is there any trend or anything new that you think any real estate player watching us shouldn't be ignoring at the moment? Anything that's changing fundamentally in the real
Yeah.
estate world that we should think about?
Yeah, there's not one, and so I'm gonna hit on a few. It's
Good.
hard to pick my favorite of the ideas, but, I think as it comes to data centers, we have to be open to embracing new technologies about liquid cooling, um, which is a much more responsible use of water and lower energy usage and ability to densify some of those data centers, which is the right thing to do from a sustainability perspective, but also cost for our customer, for the hyperscalers. Um, I think, we're open to new ideas when it comes to service, when it comes to our tenants. If there's different ways for them to get greater value, that usually leads to greater renewal probability, and they'll want to stay with us, which creates value for us as a landlord, as an owner.
Mhm.
Um, machine learning, certainly. I think we can't ignore the ideas that AI can bring with it. I started my career in Silicon Valley, so disruption is not a bad thing. And usually when there's technological innovation, be it e-commerce, be it things like AI, it usually leads to net job growth, not reduction. It may make some jobs obsolete, but it'll create other new jobs that we don't even know about today. So it's being on the forefront of that and really having physical assets that are flexible to change. As it comes to residential and the design of those, it's really trying to make those future-proofed. So if tastes change, that box that you have for amenities can be brought in new and repurposed in some way. It could go from co-working to some other use. It could be a test kitchen or something else that fits the needs of that community better. Any real estate asset, if you have the right power, the right design with it can be flexible to change. So, I mean, I think that's true of, there's a lot of concern about obsolescence with data centers. But if you have sufficient power, if you have the right location when it comes to cloud, you know, certainly the chips that may go in and the racks may go in may be replaced every 7 years. But that can be done with the right box. And so it's making sure that you've dealt with, or you've thought at least about, the risk of obsolescence. So our team takes a lot of time in working with our development partners to make sure that any kind of that future unknowns, at least we can work through it.
Justin, very insightful. Appreciate your time. We enjoyed having you guys here in Abu Dhabi, and I hope to see you very soon.
Enjoyed it a lot. Look forward to the next one.
Thank you.